All right, everyone, welcome one, welcome all. It is Wednesday, December 4th, 12:59. We'll call it 1 p.m. Eastern Standard Time. All right. How are you? Welcome one, welcome all. It is Wednesday. We are currently 6 hours away from closing out the Daily Candle. So, on an across the pond stream to reach out to our brothers and sisters way far away from the current home. Borner, hi, Alexander, afternoon. Alexander, hitting both streams. Good for you. Nasser, good to see you again. Jambi, hey, hello as always. Mayuk Benik, hello there. Brandon W, good morning from Denver. Look at this guy sitting in Colorado. Gleb, good afternoon. And Nasser, I love these early live streams. All right, good. Yeah, we've been trying to do once a week. So we'll see. We'll see how that all shakes out. If it turns into twice a week, then we'll do twice a week. I just kind of go off of your guys' feedback, and then we'll customize it from there so that it all works. All right, Michael. Hello. So unless you have been trading from under a rock, you saw the move earlier today. So that move pushed up right to the bottom resistance area right here. So on stamp, 77.72 is the mark right here. And the high so far was 77.72. The funny thing about that is 77.72 and 71 cents. Look at the candle, top left, the high, 77.72 and 71 cents. Actually to the penny. Not sure. That's crazy. Anyway, so a big push up, right? We split right through the 20 DMA, which is right here, the red one. We came right up to the bottom of resistance. On the CME chart, we filled the gap, no problem. So the very local gap right here we filled. Just got rid of that one. The bigger gap right here filled. And that was that one up to 78.05. So we were looking to fill that quickly. We did. It took it took 3 days to fill the gap. So no big deal. Got that gap filled. But look at the touchdown. Right here. Right now, I don't put too much weight in trends on the CME. I'd rather put trends on spot. That being said, I mean, there is something unique about this in the fact that, not only did it come up and fill the 78.05 gap, on CME, it traded much higher, 79.65. All right. On Bybit, I think it only went to 78.07 or something like that. So, any way you look at it, and Stamp only went to 77.72. So, think about that for a minute, how different those are, plus or minus like $50 now. It's a much larger range than earlier. CME pushing it all the way up to, a couple bucks shy of 8K is an entirely different story when we're talking 8,000 than when we're talking 77, 72, or 7,800, okay? So, something to consider. So that CME gap did get filled. The one from yesterday, the quick early daily one, that got filled as well. So 2 more gaps filled. Cross them puppies off the list. But here's the deal. What do we do now, right? We're in the middle of this candle that's showing a fairly large drawdown. So from the top of the wick down, okay, I guess the magnet is off, so let's just correct that for a second. Let's get some precise action here. $300, 3.87% down, right, from the high earlier today. The actual candle itself, I think, was 685. Yeah, 685 was the height of the candle. From the low, daily low, to the daily high. Now, the really interesting thing is right where we're at. We're actually just below where we're at. So we're looking at the 9 DEMA, 74.48. Currently trading 74.73. Structure 74.11. And then the trend, this guy, like 74.27, we'll call it 74.30. We have yet to break and close a daily candle over that trend line. Okay? This was close, but no cigar. It got beat down by this resistance, which is also what beat down the current move up earlier. Now, if you've been listening to the streams for the last few weeks, you'll hear me keep talking about this 350. The 350 is still support. Okay? No break and close below the 350 since we've come back for the retest. Have we breached the hell out of it? Sure. Have we closed below it yet? No. So something to consider, outside of all of this resistance, right? Longs still have a chance if they choose to. The ones that were trading off the 350 here, right, and going all the way up, probably are still in that same long, still in profit, but not as much as, earlier today. All right. Shorts are favorable because of the whole structure, because of literally everything, right? From 14K down is a downtrend. The local falling wedge down, right? Little retest pop over here, but failed to hit the bottom side of the actual channel itself. The larger falling wedge pattern is still intact, yet we completely front ran the pattern right in this ballpark here, mainly because this resistance was probably so strong. On top of this resistance as confluence, you were unable to push just that extra little bit to get up to the top here, which would have been the top of your larger falling wedge pattern. So with that being a thing, right? If you're going to call this a front run of the pattern, well, then your next real move is all the way down here. Just follow the pattern. The thing about this is a mid right here. So if we put on our daily, right, we can see where the median line rides on this larger pitch. Okay? So if we take support on the midline, which is what we're doing right here, we could see this go down in price, but still maintain the middle of the actual wedge for the falling wedge. It also does give some unique insight onto, where price can go, where it may find resistance, where it may find support. Look at where it found resistance right here. Confluence. Right? That's good. But it didn't really do much for you in these regards. Except for the median line, you didn't really get much out of this level here. This level here was completely abused. Right? We didn't reach anything up on these higher targets. So we're in a weird spot. It's kind of a waiting game here. Daily closes mean a lot more than an hourly close or a 4-hour close. Also, depending on your trade style, but the larger macro picture is, which way is it going? And then you can scalp all day on like a 1-hour chart. But the issue with trying to take bigger signals off smaller time frames is they don't really hold that much weight. Daily holds a whole hell of a lot more weight. Even further at the weekly. And look at what the weekly's doing. Look at this action. Right here. If we continue in this pattern, and I think regardless of what this candle does, at the end of the day, I don't know of any number that is going to stop the slope of 100-week moving average. Right? It's 100 weeks. So think about the last data entry in 100 candles, what it would have to do. Oh, we're going to bring all the drawings back, but that's all right. So what it would have to do, this is what it's calculated right now to get that slope. All of these candles. Okay? That's how you get this number. That's how you get the 100 moving average. Same thing for any average moving average, by the way. Simple, exponential. Whatever time frame you're on, that number correlates to the periods of that time frame. So it's 100 SMA, simple moving average. We're on a weekly chart, so it's going to take 100 weekly candles. Can you imagine what that last data entry would need to be for that thing to slope dramatically upward? And same thing for the 50 to keep that thing from going up and pushing it downward. It's going to take a lot, right? It would take a lot. Likely not going to happen. All right, so the more probable scenario here is long-term investors are looking at this as a potential buy. Not now, as a potential buy. Generally speaking, because we're on a weekly chart, right? You don't necessarily look for that confirmation candle, something like a weekly, because like I said, the price that you would have to print here in order to make this calculation lose its downward slope and this calculation to lose its upward slope would be insane. Not to mention, if you push the price up, right, just to get the 100 up, you're going to pull the 50 with it, right? The 50 is faster, so it reacts quicker. So you go up, $10,000, right, wherever that places this next plot, chances are it's going to cross over the 100. So these are crosses you could see happening, pretty far on in the distance, right? When this started sloping down, right, and your 100 continued sloping up, not that you could predict the actual date, but you could get fairly close and say, okay, well, it'd probably take another 8 to 10 weeks for this thing to do what it's going to do, right? And it did. And right here, if you bought at the cross, you did pretty well, didn't you? Depending on when you got out. Now, if you bought at the cross, right? Or I'm sorry, let's say this is the 50 down. So this is the downward. This is actually the downward sloping one. This would have been shorts. That would have been shorts. You did not do well on that cross. Sorry. You're looking for the long cross, and then you would have done very well. Yeah, if you played that one opposite, you'd be okay. That is not how that one worked. Not even close. Not even close. All right. But this is something traders will look for. Long-term traders, not scalpers, not 4-hour guys, but weekly, monthly, quarterly. Those traders would be looking at something like this. A 50 up over the 100, it's a good sign. It's also self-correcting. All right? You always want your averages, if they're all SMAs or all EMAs or whatever case may be, you always want the slowest one at the bottom, and then you work your way up, and you want price above that, right? So 350 is slower than the 200. 200 would be slower than the 100. If the 100 crosses down, the 50 crosses up. That corrects that movement. All right? Then you got to reclaim your price, because your price is out of order. All right, so as far as SMAs are concerned, you got a 20, a 100, a 50, a 2, and a 350. All you have to do is correct that 50, and you're in order. 20, 50, 1, 2, 3, 50. The problem is price is still underneath it. Price then has the task of creeping up over all of these moving averages, generally one level at a time, give or take, something like that. It's above the 350. It's above the 200. It is working right now to salvage being above both the 50 and the 100 in the same candle. Now, last week, the resistance was the 100. The resistance was the 100. Support at the 50. You're still getting that support from the 50, but now because of the slope downward, you're getting support at the 100 as well. If we lose 73.56, on the weekly chart, right? And you still get the cross, well, then price is going to be under using those as a resistance level. You want this, bang, 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 bang. You want to use it as a support level, obviously, if you're going long. If you're going short, this crossover is going to mess with you a little bit. Now, all moving averages, exponential, simple, whole, whatever, all those moving averages are lagging indicators. And the larger the time frame, the higher the time frame, the more lagging they are. So, this is a weekly chart. All right, taking a trading decision off that is massively lagging. So in other words, here was your indication to go short. Short happened way the hell back here. This is your indication to go long. Long happened way the hell back here. So what does that mean? Is it worthless? No, it's not. It's still an indication. It's one piece of the pie that goes on the scale when you're weighing pros and cons, longs and shorts for long-term investors. Long-term investors that have sizable capital can help shift the market because it's one of those things where all of them are going to go in at the same time, at the same level based off the same indicator, right? So that's why it becomes important, because it's a volume push for retail traders. More volume comes into the market. Therefore, dominance will then go up. Therefore, you expect price to then match. And then you get a little bit of the retail nibbling on the back end saying, well, we want to buy too. You guys think it's such a good idea. Maybe we'll get in on that party as well. So something to consider, something to think about. All right. Without all the drawings on the chart, with nothing on here but just moving averages, the 350 is holding as support. The 20 is keeping price suppressed. All right. We haven't been above the 20 since way back here in early November. When we broke it here, we had one quick false break, and it's been down ever since. On top of that, you have the 9, much faster. This is exponential. 9, EMA, daily chart, holding price up, propping it, lost it, keeping price down. This is just a one candle flip. That's all it took. And price has been down below the 9 ever since, barring this 2 candle action. But it was resistance, a break, gave it back, support. That was your first good flip, and you lost it right away. Been under it ever since. So reclamation of the 9 DEMA is numero uno. Get the 9 first, get the 20 second. That's the idea, unless you do it all in one shot. If you lose the 350, well, then we need an indication of where to go next. We're all out of averages here, so at that point, that's when something like this comes into play. And say, okay, well, we got Fibonacci levels, we got patterns we could play off of, we got structure levels, we got historical support resistance, we got everything you could ever imagine. And all of those can provide support. All right. So for now, for today, it's this. Where's this candle going to end up? Where does it close? Right? Does it close above 74.30 or does it close below 74.30? That's the question. All right, Roka, hello. Banik, just read an article. Bitcoin in 2019 will be remembered as the year institutions arrived. Institutions have been trading Bitcoin for many, 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 many years. Many years. There's a market called OTC. You don't see it on the exchange because it's not on the exchange. It's off the exchange, over the counter. Big time orders are generally placed OTC as to not destroy the integrity of the market. For those that have a moral compass. For those who don't, we'll use the media and FUD and any other means necessary in order to drive the price down so that they can accumulate as much as they can. But yeah, institutions have been in Bitcoin since the beginning. Fernando, hello. Born or Void, is there a tool to calculate what it would have to do on the fly? I mean, math. Not a tool that I know of. No, you would have to add up, each one of these. And then from there, you would have to X factor. Ooh, coffee delivery. Nice. You'd have to factor in what the variable would be in order to get that to move. Right? Like, it'd be super easy to do on like the 9 DEMA because, it'd be harder to do on a DEMA because exponential moving averages have a different algorithm. Not everything gets weighed the same. So let's do for an example here. Let's just get a clean slate of something. Okay. For a exponential moving average, let's just get some fresh candles over here. Okay. Blah, blah, blah. All right. So your 9. See how the 9's moving, right? It moves with price because it's constantly figuring in that last candle. So 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the data set it's using from this candle over. And this is for the 9 exponential moving average. All right, this is the data set that it uses to calculate this price, to calculate that plot right there, to say this is where it needs to be. That's the average. However, how an exponential moving average works, each one of these is weighed differently. Local action is weighed the highest, where the longest in the chain is weighed the lowest. So let's say this candle, right, is worth nine entries. This candle is worth 8 entries. 7, 6, 5, 4, 3, 2, 1. Right? So when you look at it and you say, okay, well, where did we close this candle out? Okay, the candle close is 71.59. That only goes into the book one time. Right? Where, okay, well, this candle closed at 75.27. So 75.27 times 2. Plus a single 71.59. And then 3 times, right, your close over here at 74.36. And 4 times this, 5 times that. You know what I'm saying? Now, that's not the exact algorithm, but that's how it works. You have more weight towards the local action. If this was a 9 simple moving average, everybody gets weighed the same, and you divide by 9. If it's 9. In this case, it's a 20. So it's 20 candles back. Everyone gets weighed the same. You divide it by 20. And that's how you plot that number. So those are examples on how to do it. I would rather not go back and count 100 candles on the weekly chart. But if you want to, that is totally your call. I don't want to do that. But you can if you want. I don't know of any tool that'll do that for you. It'd just be old school manual, calculators. All right, let's see. Could we take a look at VET BTC? Yeah, no problem. Crypto Cloud. Hey, hello. I'm bearish still. I opened a short. I think we will go down soon. Okay, very good. Gleb, can we take a look at Matic USDT in terms of a short and Link USDT? Sure. And Fernando, would you say that an indication that bulls are losing if we start losing a 4-hour candle below 7,400, or is there any other time frame that it could give you such an indication before the daily closes? Yeah, 4-hour for sure. So 4-hour is a good lead indication of what the daily's thinking, what traders are doing. It's a solid chunk of time that breaks apart in the daily nicely, right? 6 periods, 4-hour chunks that are, very good for something that's global and in multiple time frames. So basically like 2 solid periods per major time zone, right? If that makes sense. So like for people who have an 8-hour trading day or an 8-hour day, or people that trade the regular markets, traditionals or something like that, they're sort of setting aside like, all right, well, I'm going to trade from 8 in the morning to 4 p.m. And that's it. And after that, they're going to go home and get some dinner and eat their bowl of rice and go to sleep. That's whatever. So that's one of the reasons I love the 4-hour, right? And a 4-hour is just a very good chart period. Very good patterns will show on the 4-hour. Very good price action you can see on the 4-hour. The reason why we generally stick to the daily as far as the stream is concerned is because we're almost always talking about the daily candle close and how that could sort of factor in for the next day of trade. Just a bigger, larger, more local view. If we 4-houred everything, we'd never stop talking about just the 4-hour. All right, but here's where the 4-hour could trip you up. A break and close above trend, right? Break and close above trend. You got the retest, failure, 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 another retest, and failure, right? You didn't get that on the daily, right? The daily just showed rejection and then an open on the other side, right, which doesn't count, and then a drop, a massive drop. So you have to decide, how you want to trade the 4-hour, or if you're just looking for an indication, then that's one thing. And still trade on the daily or look to the daily for confirmation. But you can get an idea of what's happening right here just on the 4. So we could see price was loving the 618. Support, 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 blah, 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 blah. Big push down, sideways candle, push up, rejection. So at this point you think, all right, we lost to 618. Now we'd be looking to go down. So a lot of short traders that are trading the 4-hour chart took a short 72.33. Now they're underwater, right? You wouldn't have done that on the daily. The 4-hour you probably would have, unless you're looking for confirmation, but that's your retest. So on a SR flip retest play, that'd be a breakdown. You'd be trading short right here. Instead, the candle went up. It went north, $267, 3.71%, pushed all the way up to the resistance level and then came all the way back down. Now, what is this candle going to do? Well, on this chart, on the 4-hour, we could see rejection was respected by something, a moving average, the 100 period. So 100 period SMA on the 4-hour chart smashes it right here. All right. Now, if we look at the 100 and we say that, okay, well, one second. All right, we say that the 100 has taken out price on the 4-hour chart. How could we equate that to our daily? Because on the daily, it didn't seem like anything was knocking this down, right? 20 is way the hell up here, right? So if you can use like MTF or multi-time frame or something along those lines, or you math it out, so you say, okay, well, a 4-hour 200 on a daily is essentially like a 1200 chart. If you're on the 4-hour, right, then what would like a 1-hour be? Well, it'd be 4 times that. It would look pretty insane, but you can go back to the 4 over here and be like, okay, well, the 100's holding it back. We could say like, this is something that you might want to take some decision off of, at least on the local side. So when you're looking at the daily and you're saying like, we're just kind of hovering in the zone, I wonder what it's doing. It could be doing anything. I wonder if it has any resistance. Well, it may. Right here, it may have that resistance, which equates to more resistance if you're looking at the hourly. All right. So now you paint the hourly on here, and what do you have? You got a perfect pattern, right? So right here you pull that up, and right here you pull that down. Right? Now what do you have? Well, you got a pole, right? So it's a bull pennant. It's not a flag. A flag would come down like a 45-degree angle, be like a parallel channel. This is more of a pennant because this is a pennant-like structure. The problem is these candles are just, absorbing the entire pattern. So you'd have to go down to like a 15-minute to get any sort of like detailed information on, is this thing even like respecting? And it is, right? You got your 1, your 2, your 3, your 4, your 5. So if it's going to be a 5-point reversal, price would pop out down here and then look to the downside. If it's going to be a 5 or a 6-point continuation, then you'd be looking at price smashing through here and then coming up. Problem is we're already at the apex, right? So it's a very short-lived pattern and be a little difficult to equate this to the daily, but nonetheless, as you slide down the time frames, you will see stuff like this. And you can trade those. That's what intraday traders trade. And that's what scalpers look at, right? Scalpers, like a 1-hour chart for a scalper is probably a bit much, but it's a nice macro view. But you're trading like the 1, 3, 5-minute charts. That hourly is like the same as like us looking at like a weekly or like a monthly. It doesn't exactly hold a whole lot of weight into a super local price action. All right, let's see. Roka, I have seen most of traders using 10 SMA and 21 EMA instead of your 920. In what can that be different? It's not much different. It's not much different at all. SMA, so look, every trader is different. So you're going to have an argument for exponential moving averages being better than simple moving averages, simple moving averages being completely worthless, and exponential makes more sense because it takes into account the local price action. Dude, you could go on and on and on and on and on. The debate is not old. It's been going on for hundreds of years. I bounce around. So this 9 on here, right, used to be a 7, and I traded the 721 for a very long time. But then what I didn't like about the 7 was it was just too fast, so you get a lot of false signals. So I bumped it up to an 8 because the 8 reacted a little bit slower. It gave me one more period to sort of adjust things out, smooth things out a little bit, and therefore I was getting less false signals, but still a lot. And that's when I shoved it over to a 9. So watch as we move it, right? And look at what this does. So right here, we could say, okay, well, technically that's a break and close above, right? Well, if I move it to a 10, well, no, it's not, So that would have been a good way to remove a false signal if I was trading solely off the 9 EMA. Now, let's say I put it back down to a 7. Look at how good it looks now. Right? A beautiful break and close, come back with a retest, right? Another monster candle up, pull back with another retest, right? And then dumped it down. And then resistance, where today would actually be a break and close. So it's just your flavor, whatever you get comfortable with. Like I said, I bounce around. I've used 7s, I've used 8s, I use 9s. 10s, 11s, and 12s, all EMAs, and then I've used all of those same numbers as SMAs. Because the calculations are different, you're going to get different results. And that being said, I like what I'm using now, but there's still room for improvement, right? There's always room for improvement. If I could find like a 9.5, right? I may go down that road. A 10 SMA is not a 9 EMA. That's that's incorrect. They're calculated very differently. That's not correct. But that being said, there was a 10-10 strategy that I was dancing around with for a little while, and that's a 10 EMA, 10 SMA, and you're essentially buying the crossovers. It's you have a fast and a slow, right, or a quicker reaction, heavily weighted in the front to evenly weighted across the board. So you get different results. The only thing I can say is spend time with them and adjust them as you see fit. Some will work on some charts and some won't work on other charts. So some pairs may be slightly finicky. Once you find like an average, like for me, the nine DEMA is perfect on the daily chart, right? It's great for Bitcoin. It's great for almost all assets. So it's not perfect, right? If I'm trading like Google or Amazon or Microsoft, like it may be better an 8 or a 7. If I'm trading like, something like, I don't know, Algo or like C&D, maybe like a 10 or 11 might be better. But, a happy medium at 9 is okay. Again, we don't make like trading decisions off them. We just get ideas off of them. Same thing with the 20. I bounce back and forth between a 20 and a 21, EMA and SMA, right? So on this, you'll see here, right? I have the 21 is my set EMA, right? Yet right now my 21's off, right? Where the 20 MA is on. So you'll notice the difference when I turn the 21 EMA on. Look at the difference here, right? Just a little bit higher, but overall it didn't really do anything for us. It's still just acting as resistance, which is fine. Now your fairly standard ones, right? That you try not to deviate from too much, because now when you get into super duper extra custom stuff, right? You have to remember you might be the only person looking at that. And maybe that's your edge, right? But maybe it's also your downfall, right? Where every other trader in the world is taking a cue from the 100 moving average, and you're like, yeah, well, I'm going to use the 107. Okay. Nobody cares about the 107, right? You're not even going to get into the trade at 107, or you're going to get stuck holding the bag because everybody sold the 100. So keep that in mind, right? And I say the same thing about fib levels. There's a few very unique ones that seem to translate very well. One of those is the 706, and I use it all the time. But I've seen people throw in there like a like a 6-9 something, right? Instead of a 618, or instead of an 886 or a 786, they're like, well, it's like an 801. Okay, I mean, maybe it works once on one chart with one pair one time and never again. You're the only trader in the world looking at that level. So to make a decision off of that, I don't know, just seems like insanity. Sometimes it's better to run with the pack because, like the art of war, right? You want to know your enemy. You want to know what they're doing so that you could counter it correctly or ride the wave with them. For the longest time, I was not a fan of RSI for reasons of, every new trader in the world was like RSI, and it only tells you overbought and oversold. Well, it doesn't. First you have to learn it. You have to spend, you got to spend a few months with it and really understand what it does and what it does tell you. It's far more than just overbought and oversold. But that being said, right, the idea at the time was everybody else is looking at it. I want to know what they're seeing. Whether I use it or not makes absolutely no difference. I want to step into their trading room, and I want to know if they're looking to sell, right? Because then I might be looking to sell, right? Or if they're all looking to buy, well, then I might be looking to buy. Or if they're all going one way, well, then I could say, well, that's where the liquidity is, right? You want to be able to know what they're doing and when they're doing it and when they're taking their cues so that you could be on the same page. All right. Anyway, so that's definitely Joe L's fault. All right. So Fernando, great explanation, brother. I thank you very much. Not sure about what, but awesome. What's your bias here? And could you say why I just just to see your way of thinking and a little tip. Yeah, I mean, bias here is neutral, right? So look, I'm still on the 350 kick, right? Because it's a fascinating thing, right? That does not happen often. The 350's a monster moving average. We just don't interact with it all that often. And that for me brings it up to ideally 9,400. All right. But it has to continue to hold. And, I'm not going to allow that to blind me of all of the resistance, right? So for all of the resistance, I have reasons to be short at 7,800, short at 7,650, short right here, 74.11, 74.30. There's reasons to be short, and there's less reasons to be long. So the overall bias, like if I were to look at this right now and say, all right, I have to make a trade long or short based off of where this candle is sitting at the present moment, I'd have to go short. Because of the rejection at 78 and resistance, the rejection at the 20, which is the first time we've come across the 20 in 3 weeks since November 10th, right? Overall, this level has been breached many times, but never closed. 5 hours and 18 minutes left on the clock, right? The probability of closing over it when it has never happened before, going back to creation at October 25th, which doesn't really count because that's the first candle. So we'll call the next candle October 26th. The probability for me to say that it'll close over that when it's never done it before, I would have to be insane. Can it? Absolutely. Will it? Probably, now that I said it won't, but that's not the point. The point is anything could happen. This candle could go up $10,000 right now, and it'd be the most epic event in Bitcoin since 2009. And it doesn't mean that it's going to. When you trade, you have to be neutral to the chart. If you're an FA trader, I don't care. I don't care what you see on the chart, right? It doesn't make any difference. You're going by fundamental analysis. It's an entirely different ballgame. If you're a technical trader and you're going by technicals, then you are basing every trade off of probabilities, whether you realize you're doing it or not, right? That is how we calculate a quality setup. There's this dude Bulkowski, and he went and this dude he was super data scientist, absolute nerd, and just went through pattern after pattern after pattern and used some AI algorithm back in the day to spot these patterns on these charts and then, calculate calculate the probability of whether something was breaking out or breaking down or throwing back or retracing or, for example, a hammer. So you have a hammer with a confirmation. Let's say he figured out that after, testing 10,000 hammers or 20,000 hammers or 50,000 hammers, that given these unique circumstances, he could say with a 60% strike rate or 60% confidence that the next candle will go up after confirmation. That's what we're looking for. Probabilities. The probability of this breaking and closing over this trend is 1 in 100, I guess you could say, or 1 in whatever this line is, because the day's not over. So there is a chance, but there are all these other days where it didn't. So we could just do this real quick and say, okay, the probability of that candle Breaking and closing above this trend is 1 in 37. 1 in 37. Are you betting on that? Right? So in other words, you're given the option to have like the world's best knife thrower. This is probably a bad example. The world's worst knife thrower. There you go. The world's worst knife thrower to throw a knife at an apple that is on your head. He has missed 37 times in a row. But he's feeling really good. Right? He feels really good. All right, are you going to hand him the knife? You going to say, "Go ahead, dude. Yeah, I mean, you're feeling super good about it. You could do it this time." Yeah, probably. Even though, the other 37 attempts were losers. Now, so that's what I'm looking at. If I, gun to my head, I got to make a decision, I'd have to short this. Does that make sense? Anyway, we'll blame that on Joel because that's definitely his fault. Okay, we have some charts we got to look at. I got to go all the way back up to the top here. What was the first one was VET, correct? Yeah, VET BTC. All right, let's take a look. Let's fire up a couple of these puppies. See what we see. All right, VET sitting on the 5 right now. Solid move. Overall, good pullback. So this is what I was talking about before about reclamation, right? Keeping these puppies in order, right? So you have the 9, price has the 9, you lose the 9, where do you go? You go to the 20. If you lost to 20 again, right, I'd be looking to the next major moving average, which was the 200 EMA. Even though it's not in order, it's the next one down, right? So right here, 200 EMA, tapped it right here. Lost to 20, got the 200. 200 push back up. Now it's support. Now you get the 9 back. Got the 9 back, push it back down, lost it, got the 20. 20 salvaged by the 382. Confluence with other things in the market, right? So not only do you have, okay, I got a little bit of support here from the 20, but hey, you know what? I got my friend over here, 382. He's got my back. We're all straight. We're all good. Pushed it back up. Came right to where? Look at that. Look at that close. It's exactly on the 5. Right? Push back up. Tried to get the 6. Failed short. Came all the way back down. Pulled back to the 5. The only problem with this is the 5 is not structure. This is structure. And we got it right there. Right there. Came right back down to structure. Perfect play to go long right here. Push up. Even though this candle doesn't look great, right? Don't forget, Bitcoin lost 300 something bucks, right, on the move up. So VET probably rode the train for a little while with Bitcoin, and then when Bitcoin pulled back, so did VET. VET's got to get its groove back, and VET's got to do its thing and not ride off the shoulders of Bitcoin, right? And when it does, it should be able to hit that 618 no problem. All right? So that's the idea for VET. Oh, my. Jeez Louise. See that the earlier the streams, the more random phone calls that come in. Now I got coffee. I was slugging back a gigantic cup of eggnog. That might not be everybody's thing, and it's probably not good for me later on today, but whew, it's really good. So anyway, you got structure retest right here on top of the 5 with a push to the 6-1. All is good. You got the 9 support, you got the 20 support. 20's crossing up over the 350. That can't hurt. And look for the 618 next level, 111. After that, we might be getting into some structure zones. Not really. Yeah, the 6 is also structure. This right here. So the 6 could be a little bit more difficult. Right? It's got to maneuver all of this junk. So consider that, which it is, right, the first test and rejection found. right? So it actually did creep into there. That's structure because of this. Pull back down, found support. Pull back down, found support. Double bottom, push up. Came back down, found support again. Lost it. Break, push back. Retest. All right. That action right here, back in May, right, is most likely the reason why this lost right here. All right. That's how we look at structure levels. So that's VET. VET BTC. Okay, what else we got? Let's see. Can we take a look at Matic USDT in terms of a short? Well, we'll just look at Matic, and then what we see, right? You want to try not to do that. As far as I want to take a look at this chart because I want to go short. You're mentally going into a chart only looking for shorts, right? So your bias is completely out the window. You're not allowed to look at that chart anymore. You know what I'm saying? You want to be neutral because you don't want to see something bullish and then have 1,000 reasons why it's not bullish because you want to go short. It's not how it works. Same thing with going long. You don't want to pull up a Bitcoin chart because you're in a long, praying that it'll go long. You're not going to see all the obvious shorts in front of you. And you need to, right? You need to see those. That's how you can, analyze what you're looking at so that it makes the most sense, but have the least amount of bias or stay as neutral as possible. All right. So a couple things on Matic USDT. So this level is interesting. We're finally up this high, so we can start painting these back in here. Let's just make that black. Bang, bang. All right, so this sim try over here, I think it's probably time we can get rid of that action. This is interesting, but I'm not sure we necessarily need it anymore. So we could do like some internal levels here. Let's bounce that for now. Let's get that thing out of here. Now this lower one's interesting. So forming the pattern and then continuing the pattern, we broke and closed here, so not a very good reaction there, and then this is kind of like a retest. I'm going to get rid of that because that's a little sloppy. I don't like it. As far as our moving averages are concerned, we're so well beyond all of them. I'm going to take those off for the moment. We don't necessarily need to cloud the picture up with anything else. These levels are all but useless at the moment. However, we could take a longer view like this. And we could see this as the breakaway, the pullback, retest, push. So we can get some ideas off of that. We're going to leave that for now. Let's get rid of that. All right, so now on our chart, at least it's much more simplified. Right now we can at least sort of diagnose what we're looking at in an easier to swallow pill. So here's the breakout play, right? That's your breakout. So I like to measure, the push up and the drop before the breakout. This sort of gives me an idea of what kind of strength we have in the actual move itself. So I'll just do something like this. I'll throw out my template for targets. And then what I'm looking for is reaction at the 1.6, the 2.6, sometimes the 3, but more likely the 4.2. Okay, and that's good. That's good, but it's not great. So I might have to take the whole move. So from the high to the low before the push. Now we could see 3.6. That's perfect. 2.6, just about structure. I'll take that. 1.6, perfect. Close right on the 1.6. This is a winner. So now this is what I'll be going by. 3.6 taking a little bit of heat, no problem. Minor pullback down to structure at 29.53. That's definitely a potential. If not, a push right up to the 4.2, 35. All right. So in terms of a short, be looking to short 35.49. right, as the next level of take profits. This would be your next major level of resistance or potential level of resistance. It's not really major because it's an extension, but okay. Now your all-time high will likely be a factor, as price would be targeting that all-time high, right? Now look at the move here. 1, 2, 3. 3 pullbacks, right? This could already be starting to get exhausted. Exhaustion, 4, 2, 3 is normal. Not that it's normal, but it happens often. All right? So if you wanted to short right now, you're essentially short the 3, 6, 1, 8. You could probably short it down to the 2, 2, 6. However, with this level of support right here, holding price up at the moment, your short might only last to 29.53, which almost makes it not worth shorting, unless you're just going to scalp it. Next push up to 35 is what I would be looking for. At that point, I could see something like this play out. Structure retest. Coincide with a 1-6. You can see that. Yep. Now let's get this extension. Let's see where we're at. Sitting right around the 236 of the whole move. Confluence, the 423. Target area. Pullback zone, just above the 618. Get right into the golden pocket. Right? Confluence across the board. So essentially a push up to the 236 and a drop back down to the 618. And then a push up to like an extension 127, something like that. Sound good? Okay, good. Let's see where we at here. So that was Matic and Link USDT for Gleb. Oh, Link, what have you done? Well, Link lost its rising wedge, pushed down, lost its larger swing fail over here. Right here, lost it, came back, retested, further downside, just about the 618, pushed back up, structure level, right, trend on swing fail, resistance again, pushed it back down, almost a double bottom, 6-1, looking for a push. So, looking for the 6-1 to hold, right? It's a good level. You got good action over here, good action over here, good action over here. Looking for the 6-1 to hold. If the 6-1 doesn't hold, then, you know, these areas down back here at 1-4, you can look for the 7-0. Yeah, there's some options down below, but like ideally one level at a time. You're looking for that 6-1 to hold. That's pretty aggressive. This push down here, but yeah, it just couldn't handle it. Link just couldn't handle it. Right? I think a lot more people want to accumulate this at like under $1, which, you know, then puts it like back into like this ballpark over here, which gets super ugly. But this whole zone right here is really good. That big block to come back to. Confluence with like trend would be nice. But yeah, overall right now, just looking for the 6-1 to hold. That's this right here. Just looking for that to hold. If it does, you know, we're good. This is 1, 2, so it'd be like third time cupping up on this resistance level. Now currently sitting around like 230. You got to get back up to 250 just to regain some of that earlier structure. And then 2.9, get back to like the 350 zone is the ideal, right? That's the 4.2. We hit that earlier, on the major run up. Next big level is $6, right? At the 823 from the overall local move that pushed to the all-time high. So there's stuff on there, but Link is just not getting much love lately. It's just getting hammered. So looking for the 6-1 to hold. All right, let's see. Indicator for 4 hours. Was that it? Just those 3 charts? All right, very good. Let's see. 2 days ago, talked about ENJ, and now it pumped. Yeah, because you deleted messages. You thought I forgot? Yeah. Good thing Nasser wasn't here. Oh. Nasser be like sending you private messages. Not good with like Pepe memes. Bad news. See Roka. That's classic. Yeah. 10% gain. Could have been 30. Matic BTC shows bearish div. Matic USD also. ENJ is just relentless. How do you spin rotate the line extension? How do you spin rotate the line extension? Spin rotate the line extension. What? Like just like on array? Like this? Like you're saying like the array? Like you just click it. You can rotate it wherever you want. Is that what you're asking? I don't really know what you're asking here. Hopefully that's it, James. It's got 2 anchors. So like, once you click on it, it'll show you the anchors. And if you don't want the extension, you could just come down here and change it, right? You could change the end to just be a segment. But why do that when you can have that? Whoa, wrong way. Oh jeez. Oh man, everything's ruined now. James, what did you do? Yeah, and then you could just pick it up and move it. I hope that's what you meant. If not, just just pop in a comment. We'll figure it out. Let's see. Gleb, thanks. You are welcome. Roka, you are yeah, Mr. Deletion. Roka's now Mr. Deletion. It's all right. You'll lose the nickname by tomorrow. Simon says nothing but Raven. Simon, you didn't even say hi. What if Roka's like, man, I hope Simon says hi to me. And then nothing. Right? He misses ENJ pump. Nasser's going to send him Pepe memes. And now you didn't even say hi to him. So that's unbelievable. Now Raven's, leaving on a jet plane. All right, so Raven USDT. Good move. The problem is we're right in a bad spot, but that's okay. So resistance levels from the low of this candle up to like the bottom of those candles would be like basically that ballpark right here. So we're on it currently. Now, generally speaking, the first time you come up to something like this, you'll find resistance. So, I don't want to be a Debbie Downer. Or maybe I do. I don't know. But I would be looking to do that. Not to say that it's, not going to do this. That. Yeah, I mean, it may. But I would think something more like that. And then that. To here. Structure. Like so. Now, there's not a whole lot of data, at least not on Binance, not for the tether pair. We'll see what we got on the smaller guys here. So we did just get the 920 cross. That's good. Yesterday's resistance was on the newly formed 50. Today, currently up over the 50. So if it could hold, great. If it breaks above this level, and closes there on the daily, then, I'd be looking at something more short term, like just a little pullback, and then further upside. But if we do get the close below, I'd be looking at something like this. That's okay. It's really not a big deal. Let's see what kind of fib we'd have here. So I would bring this down to the 6-1. And that covers structure as well as a 618 pullback. All right. Now the overall, let's see what the high is here. So we got the 2-3 super easy. Broke that here. Never came back and retested it. That gets me a little nervous. The 382, we did get rejection from, but mostly from the 50, less from the 38, but it did close below it. Push back up, breaking it currently. Nothing at the 5, 6, 7. Could see temporary resistance and a possible shift completely. The 7, 8. Which could then really break people's hearts. And like do that. Oof. I'm going to delete that just so people don't cry. All right. Similar to this. Here's the thing. This is a major level of support, right? Price came down, found this zone after dancing around with it a few times here, right? So it's got some history to it. We could do this actually, if that makes it easier to see. Let's see, it'd be more like that. Okay. So you can see like, all right, second candle up, resistance, broke, close, bang, 2, 3, 4, 4 days support, push up, came back down, retested it. So this level we already know from back here is a good level. Price comes up, makes a new, high, pulls back down, pushes just below it. But again, the overall zone holds it 1, 2, 3, 4, 5 times, 6, 7, 8, 9, 10, 11, 12, 13 times. Break and close below. Never got the retest. So this could actually come lower. I don't want to go that low. Let's just take it easy, Mr. Computer Fingers. Something like that. Break and close below, retest. And I like that it does encompass these wicks a little bit better. So that's good. That's a better level. Plus, perfect rejection from this guy. So I'll push up from the 50 and resistance at the low. Like exactly what Bitcoin did today, right? Pushed up right to the bottom of the resistance level and pulled back down. Speaking of Bitcoin, we should probably take a look at that. Anyway, so I'd be looking at this. Be looking at, if we don't break and close above it, I'd be looking at a pullback, structure, push back up, hopefully break it on the next time through, in which case I'll be looking at like the 786 for an overall buy, or overall take profit. Sound good? Good. Simon said hi. Hello, Simon. Very nice. Mark, greetings from Saigon. Holy mackerel. Greetings. Nice shades. James, yes. Okay, for the rotating spin rate thing. Very good. I didn't see that last bit. Very nice. Very nice. Yeah, thank you, Joe. Thanks, Joe. Very helpful. All right, very good, Simon. Cool. Let's take one last look at Bitcoin, and then we'll wrap it up for today. What do we got here? Anything? Anything to talk about? No, not really. Just continuing to push, just maintaining that little zone right here. So again, like the hourly chart, you can just get an idea of what it's actually doing. This would show a breakout, it looks like. Let's take a look here. Is this a breakout? Possibly. Yeah. So showing a breakout on the 1 hour chart, holding trend on the 1 hour chart. Again, you put as much weight into the 1 hour chart. If you're trading the 1 hour chart, if you're not trading the 1 hour chart, then Don't put too much confidence in it. These lower time frames will break your heart. All right. But, bull, pennant, break, north, you could technically say you'd be looking at the pole, give or take, something like this with the breakout candle here. So a potential of really getting back to the high from earlier today. This would put it at like 77.83 ballpark. I mean, I didn't really measure this stuff, but basically back to today's high. So that could be a really big deal, and that would absolutely demonstrate, at least for now, it would demonstrate that a break and close above trend and then resistance as the next major level. Look for a pullback down, a little bit lower, about halfway through this candle body currently sitting, but basically right back to trend as a retest level, and then further upside. If that is the case and we close a candle, way the hell up here at 77 and change, then that's what I'd be looking at is pull back, grab it, push up, and start breaking through some of these levels, whether we break through them all in one candle or we break through one at a time. Something like that. Sound good? It's a ray, not a trend. What? It's a ray, not a trend. Line is the answer. Oh, gotcha. Okay. Yeah. Yeah, I mean they're all the same thing. So you can modify any of these. Like here's a trend line, right? And if I want to turn it into a ray, right? Okay, well, now it's a ray. Holy mackerel. And if I want to turn it into an extension both ways, I could do that as well. Just by doing, left end, and then do the, holy mackerel. Now we got some crazy action over here. But it is nice just to keep it, default, and then you don't have to adjust stuff later and wonder why, like, hey, why can't I get rid of this ray? I just wanted a thing. You can add some arrows on here if you want, whatever. But that is the same as the, where is it? As the arrow, as well as the ray, and as well as the extended, right? All four of those things are the same. Same customized options down to the bottom. Cool? Very cool. All right, everybody. That will wrap it up for the day. Hello from the Eastern time zone to across the pond to everywhere from, North Carolina to Saigon. It's always a pleasure. I hope everybody has a great rest of the day, night, morning, evening, afternoon, wherever you are, whatever the case may be. We will close this candle down in just under 5 hours, so we'll get some answers there as far as what Bitcoin is looking to do at that 7,400 zone, and then we'll take it from there. So I want to see you guys on the exchanges, and until then, Dubai. Hey, very nice. Well, you're very welcome. I want to see you guys on the exchanges. Until then, happy trading.